So I had a special request from a loyal viewer wanting me to go into more detail on two of my favorite indicators. So I'll be delighted to do that. My name is Brian Cannon, and welcome to Markets in 5. All right, so if you watch Markets in 5, then this won't be a surprise. My two favorite indicators that I like to use, my go-to indicators, are RSI combined with MACD. So what is RSI and what is MACD? RSI is the relative strength index, and it measures the magnitude and velocity of a price change. So when a reading of 70 clicks in, it is considered to be overbought. And conversely, when it reads at a 30% or lower, then it's considered to be oversold. And so it really does a pretty good job on measuring trend reversals. When we combine RSI with MACD, it can be a powerful combination. MACD is moving average convergence and divergence. And so really it measures the strength, the direction, the momentum, the duration, of a price movement. So it looks at the 12-day relative to the 26-day exponential moving average. So that's a lot of technical talk, but essentially what we look for is the combination of the two. And so when we look at the S&P 500 here, so for instance, when in the green, you can see that the RSI is consistently staying above 50. It does certainly drop down a little bit, but it stays above 50 for the most part. That means that the stock market is running and being pretty healthy. When it consistently stays below 50, then you can see that the stock is typically trending down and not very healthy. And so when we look at that relative to the MACD, you can see that, again, when the MACD is positive up here in this green circle, then it kind of supports the fact that the stocks are running and that the stocks are healthy. Now, when you have a drop down in RSI up here, and that's combined with a crossover to the downside on MACD, I mean, that's certainly a warning sign, but that's not necessarily an actionable move. However, when MACD crosses below zero and that's combined with an RSI that's negative, then you can see that this seems to be a downtrend that's in play right now. So then we use technical analysis and trend following, support and resistance zones and moving averages to kind of determine where support might be and where we might want to be picking up. But essentially, we want to wait for the MACD to cross back above positive, and we want the RSI to support that move with a move above 50. So when you do that, essentially you want to try to avoid most of the downside and then get back in as early as you can and as safely as you can to catch the next move up. So when we look at this relative to the NASDAQ, which is mostly your tech stocks, kind of the same thing, right? So you have a MACD telling you a story. Even though it's negative, it's having a higher high, higher low kind of up here, crossed back above it and really stayed positive. And that correlated with a breakout on the NASDAQ. So once the kind of the downtrend was over and it started having higher highs and higher lows, that's about the time that MACD was saying, hey, this is really overbought. It's time to start buying this thing. And then you also saw kind of a higher high, higher low kind of scenario in the RSI up here. And again, it stayed mostly positive during this move, right? So then right here, when RSI dropped down, it combined with a kind of a lower high, lower low kind of drop down on MACD, but it was still positive. So it's not necessarily something you want to take action on until you kind of get this negative move, right? And then you can really try to avoid the majority of any sort of downside. I mean, you really don't know how far it's going to go, so it's really just kind of measuring the risk and saying how much do we want to accept and how much do we not. But essentially, when we get that crossover back on the MACD and it crosses back over above 50 on the RSI, it's a really good time to buy, especially when you get a breakout. So this is definitely a good time, and this is nice little run. So you are seeing a negative divergence here where you're having lower highs and lower lows on both the RSI and the MACD at this point. So what that tells you is that both indicators are starting to lose momentum as the stock is continuing to charge higher. So that just tells you it's an early warning sign. Be a little cautious. So now you want to start watching your supports. You want to start watching your moving averages. And if you really start to drop down, especially in a qualified account where there's no taxation, it's probably a pretty good idea to go ahead and start taking some of the risk off the table. All right, the last chart here is a measure of the light sweet crude, and we use this to kind of determine do we want to be in energy stocks or not. And so when the stocks were having lower highs and lower lows, you can see that the RSI was primarily in below 50, and you had MACD that dropped down negative. So then when you had a breakout here, then you saw the RSI roll up above 50, and you had the MACD kind of supporting this move up with higher highs, higher lows. It had not broken out to positive yet, but it wasn't too long that it followed. So we did buy this breakout on some of our energy stocks. It came down and kind of tested this breakout. It held and then took off. Now you can see that we're overbought here, but again, that's not a sell signal in and of itself. In fact, when you look at the fact that it's overbought up here, MACD is not supporting that overboughtness. It's basically saying, hey, this thing still potentially could be running, and this might be a little, there might be a pullback, but it's probably more of a buying opportunity until you see, MACD really start to go back into the negative zone and see the RSI drop down. That's where we can't market time. We have no idea what it's going to do. We just use these indicators to kind of help determine how much risk we want to accept inside the market. So technical analysis really is a combination of art and science. And, you can't look at one or two indicators inside of a vacuum and get any sort of good information. Rather, you need to step back and look at the big picture. Look at what all the indicators are telling and follow that story. So, but if you have any questions, give me a shout, and I look forward to seeing you on the next Markets in 5.